Hello and welcome to another episode of the Real Estate Investing Club, the place investors go to learn tips, tricks, and stories from other investors in the field. Before I introduce today's guest, I have three short housekeeping items to cover. First, if you like our content, the best way to support us is simply to like, subscribe, comment, or share this episode with your friends and family. Second, we are active investors ourselves and are always on the lookout for mobile home, RV, mixed-use commercial, and multifamily properties in MSAs with a population of 100,000 or more. So if you are also an active investor and have something you think we may be interested in, we would love to take a look. Send us the details of the deal at www.therealestateinvestingclub.com. Third, if you are a new investor and would like to learn how to get started or scale your real estate investing business, go to www.therealestateinvestingclub.com to check out our course. So without further ado, let's dive right in. We have a very special guest with us today, so buckle up, grab your pen and paper, and enjoy the ride. All right, and we are live. Today we have with us Noble DraKoln. Noble is a crowdfunding and capital raising consultant. He is the publisher of Accredited Investor Journal, and he is also the author of the best-selling books Trade Like a Pro and Winning the Trading Game. Noble, thank you very much for hopping on the show today. How are you?
Good, man. Gabe, I'm so happy to be here. It's always cool seeing people who are, either following me on LinkedIn or connected to me on LinkedIn, and just kind of see them in person right now. So, if it wasn't for the pandemic, I would have probably met half the people who are connected to me on LinkedIn. And so it's been fun meeting everybody.
Absolutely. Yeah. Same here. This is this whole thing kind of started out of the pandemic. So it's interesting to see how it's kind of changed the landscape. And I have to apologize before we get started. We're kind of changing seasons. It's late August right now. And so my nose is a little stuffy. So it might come out odd, both for you and for the listeners. So anyways, besides that, let's get started. To get us started, why don't you tell everybody where you are, what you do, and how you got started in real estate investing in the first place?
Yeah, it's interesting. Man, that's a lot of questions all smashed into one.
Yeah, it is.
So yeah, I'm based in Southern California. So I've been originally from New York, and then my family moved out here when I was a teenager. And so I lived out here in California my whole life. And I've seen all the different cycles of the boom and bust in real estate in Southern California, particularly Los Angeles, Orange County. And so it's been a very interesting cycle for real estate investing for me. My background, I got my license as a licensed commodities broker when I was 19. And I started off as an apprentice when I was 17. And so I've always been involved in investing and investments overall. And I guess early on in my real estate career, I really approached real estate investing more like trading, right? Buy low, sell high. And so that was really how I got involved in any kind in real estate investing, period. The whole focus was on flipping, buying stuff, finding if we could get it wholesale and the like. And it really heated up for me back in like the mid 2000s, like 2005, or the early 2000s, or 2005, prior to the crash, when I started being aggressive in my flipping, like a lot of people were.
Gotcha. 2000. So, oh wow. So you went, well, that was before the crash. You were flipping.
Exactly.
Oh wow. So how 2008 came. What happened at that point?
Yeah. So that was my second foray into flipping. I think I know my first foray was in the late 90s. When I got involved in real estate, my mentors were always very poignant in telling me that I needed to focus within a 5-mile radius, right? So,
interesting. Wow, 5 miles.
Back in 1990, that was kind of it. Within a 5-mile radius of your home, if you could focus there, you'll be able to find opportunities. And at that time, like in 1997, 1996, that was a really great advice, right? So I started investing in Long Beach where I lived, and there was a huge movement to convert a lot of apartments into condos. And so I bought a couple of really inexpensive conversions, and I did well. It wasn't like I made a killing, but I depending on who you talk to, but yeah. I did really well. for my first foray, right? And I think that we get was a confirmation bias that we think that, oh man, that the way that I did that is always going to work, and and so it was just buying and flipping, right? You buy an apartment for 50, 60,000, and then you're flipping them out for a few $100,000. So you're doing great. That kind of it reached its own crescendo, and my appetite got. So one of the things I think we always, especially when we're close to the canvas with real estate, when prices go up, we go, oh man, I remember when I could get it at XYZ price, especially when you're a flipper. And so you kind of let the market pass you because you don't want to overpay because you bought it so cheap before. Yep. And so I kind of made my money, stepped away from that, and I did well. Then when 2005 came, I figured the market's heating up. The money was super easy. 2004, I'm looking at it. I'm like, you know what? Let me go ahead and make an attempt at it again. And so when 2008 came, like everybody else, I was kind of left holding the bag. I had property that was overvalued. I had no way to really offload it because, real estate, especially in the flipping market, runs on the greater fool theory. And mind you, I'm a trader, so everything I always talk about is always in trading terms. So so hopefully your audience gets where I'm going.
No, I love it. And actually, what is the greater fool theory? I've never heard of that one.
Oh man, the greater fool theory is that you're always looking for somebody who's willing to pay a higher price than you, regardless of whether or not it makes sense. So the greater fool, right? You're buying
gotcha.
To continuously sell higher, and someone else is trying to sell higher. Then there's eventually nobody who's willing to buy any higher, right? And so you're left holding
you're the last. Yeah, left with the bag.
You're the one left with the bag, right? And so, the bottom line is, so I was the guy. What they say when you sit down and play poker, if you can't figure out who the mark is, then you're the mark. So, so I sat there and, I ended up short selling stuff. I ended up giving stuff back to the bank. The beauty of, buying stuff as an investor is you have non-recourse loans. And I just kind of walked away from real estate at that moment. And I was like, you know what? I'm burnt out. It makes no sense to continue. And, there's nobody else I could find to buy higher. And I wasn't alone. Mortgage-backed securities, MBS is unfortunate. A lot of other people I know at that time were way more leveraged than me to the hilt, because I've always been a hobbyist at the end of the day. Because I've worked as a commission operator and have my own businesses for a long time. My focus has always been 100% on investing with the idea of retirement. So when I buy the stuff,
there's a bunch of ants swarming in my office.
Working from home, guys. It's got an ant problem now.
Beauty of the coronavirus.
Right. So for me, I didn't get left holding as big a bag as some people did, but it definitely, I got a spanking, and I rethought a lot about my approach to real estate investing at that time. So, when I came back a couple of years later, I had a whole different mindset.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast. Oh yeah. Okay. So you were kind of 2008 hit. You had the properties in your hand. You're like, shit, I don't want these. Actually, this is not a good deal. So, can you give us just an example? Like give an example of just one property. You're like, where were you at 2008? And then after 2008, what was it valued at?
Yeah. So, when there was a triplex in this is a great example. There's a triplex not too far from a community college that the city had just made an approval to expand that campus.
Oh, nice.
And so we were like, great, buy the triplex, we're guaranteed renters, the whole nine. And when we bought it, I bought it at like five. At the time, it was super expensive. It was like $560 for. So this is another conversion, right? So I bought it at $560 for the unit in the triplex, right? So the whole building was worth like 1.5 or 1.6 at the time. So I bought one of the units. It was a 3-bedroom. I was planning to rent out each one of the rooms to the local kids who come to the college there who want to be close to the college. And, the math worked out at that point. Post 2008, I think the whole building was worth $560. Yeah. And so it was, and mind you, this was in a lower income area of the neighborhood, but it was on the cusp of the redevelopment. So it had all these great factors that should have been good,
That should have
but
worked
it
out.
just never panned out fast enough. And there was nobody else. And so for us, we were fixing it up, ready to convert it. And when I went out to put it on the market, there was just nobody who was ready to buy. Yeah, crickets.
Have you looked at that property since? Like, it's probably worth what, 2 now?
It could be, and I'm not one of those hindsight, again, trading teaches me one thing. Once you exit a trade, you just kind of move on. I don't really make it a psychological what if in my mind, because you only can work with information you have at the time you have it. And so it's not really, that's never been the way I operate. So, you take the opportunities, you make your profits when you can make them, because nobody can predict the future. Yep. And, some people who've held on one day too long in hopes that it'll do well. So I'm okay holding on one day too short to just take what I can see on the table.
Yep. No, I think that is the right approach, in the sense that you're not going to lose money that way. I like that.
Nope, you're not going to lose money. And not just lose money, lose principal, right? We will make a profit, but the whole goal is to maintain and manage principal. And that's was kind of my conversion. I've been in the investment arena for a long time, and people have hired us to raise capital for their companies. And so in 2010, the first thing I did was I started buying a lot of pre-foreclosures, because even though 2008 was the year that impacted people, still people were reeling from the effects. And so I bought pre-foreclosure in the worst house in the best neighborhood. We moved into it, that built up instant equity as we repaired and fixed it, and still the neighborhood was going up. So we did well personal. But as I also looked at the landscape, a lot of the buddies that I would co-invest with, they were going to Palm Springs and Palm Desert to buy these mega mansions and do these really aggressive fix and flips. And I was just burnt out on fix and flipping it. I don't think, I think there's always opportunity in it. And it just, at the end of the day, particularly in Southern California, your capital commitments and carrying costs are so high that at some point you got to wonder, you're literally like every property you're rolling the dice on. And that's kind of that doesn't have a sustainability, I don't think.
Make $500,000 or lose $500,000.
Right. There's no in between on that one. You kind of bail it out and hope that at the very least you get a break even. Right.
Yeah. That's funny. Great. So, I mean, a lot of experience since that 2008 crash. Kind of what have you been doing in the real estate sphere since then?
So, when I got back involved, I had a whole different objective. Like I said, my goal has always been to buy real estate or do real estate deals to start building on my retirement, to have a cash coffer that just comes in real estate. They're of high ticket items that are accessible to just ordinary people. There are very few, never everybody's going to become a private equity guy, or everyone's going to become a startup or angel investor that's going to find the next Uber or Lyft. Whereas real estate is ubiquitous. Anybody can go out, in any city, in any country in the world, and get a property and buy it, fix it, flip it, or bigger pockets. I didn't even have a term for it, but buy it, rent it. The BRRRR method.
The BRRRR.
Yeah.
Yep.
But I was already doing that before. I was like, oh, that's a cool acronym.
There's a term for that. Oh man.
Yeah, I should have thought of it. But buy it, rehab it, rent it out, right? So, but I just kind of changed my philosophy, and I started focusing more on cash flow and looking at investments in real estate more as mini businesses. And that's when I started looking at buying duplexes, tris, quads, looking at multi-units, and looking a lot less for the immediate gratification of the big rip that we all kind of get, that euphoric high. It's a great dopamine rush. There's a lot of stress leading up to it, but there's a huge dopamine rush when it happens. And then there's the commiserate. The commiserate is that if it doesn't happen, it's big letdown, right? So, and so when I started looking at that, I came across a guy who was doing rentals in Cleveland, Ohio, and I'd never ever thought of Cleveland, never thought of Ohio as an investment place. And he sat down and he explained the numbers. He said, "You know what? I've been buying these houses for 15 and 20,000, getting them ready for between 7 and 10, and just renting them out at anywhere from $750 to $950 a month." And at that point, he had 100 doors, and he was doing about 95,000 gross a month, minus minus expenses. He was keeping about 65 grand a month in just cash flow.
Geez, exactly. That is great NOI. Yeah, killer.
Great NOI. And that's when I found out that Cleveland was running anywhere from 15 to 25% return on investment. And it was about 3 weeks later, I flew out there, and I had to see it for myself, to see the reality of the situation. And so I ended up buying my first 3-bedroom, 1-bath, like 1.5 bath home, brick house, built originally in 1907. Updated since then for $16,782 off of auction.com. And
like
started
the price of a car,
real estate, right? Started my whole real estate investing in Cleveland out of the blue. I'm like, man, that's so much more accessible than having these huge commitments here in Southern California.
Yep. Yeah, I'm in the Seattle market, so I feel you. It's it's not, Southern California is worse than Seattle, but not by much. It's the values here are just ridiculous, and when it comes to rentals, it's like it's really hard to eke out those numbers. But yeah, I've looked in all the area all the way under or all of the area under the Great Lakes is just very, very attractive. When did you first start investing out there in Cleveland?
2013.
Oh man, so you got in real early. That's awesome.
Yeah, I mean, it was it made sense, and like I said, it's a hobby for me. It wasn't like I was going out to be like I said, it was worthwhile. It wasn't like I needed it for my day job, and I couldn't eat unless I went out and bought property. So for me, it was, let me go ahead and test it out. And so I tested out the market. I bought my first property. And then I started creating a whole entire ecosystem, right, of contractors, property managers, creating the boots on the ground. Everyone says it, but it's a lot of effort and energy to do it, and to make it a reality, to create an ecosystem of relationships that can find you property. I developed relationships with wholesalers. I developed relations with just multiple people. And at that same time, we were helping syndicators. I started off with a database of maybe 115,000 accredited investors who bought either my books or saw me on TV on Bloomberg or Fox Business News. And now, because of us helping people raise funds for their syndications and their private companies, we have like 900,000 investors on our database.
Oh, wow.
And so we just started sharing the opportunities. And at one point, we were taking people out about 4 or 5 times a year to Cleveland to introduce them to our boots on the ground and our relationships, so they could actually see what the opportunities are.
Wow, that would actually be a lot of fun.
Yeah, I made it like for me it was a 3-day trip. We go out on a Friday, and we get there Friday morning. And for me, I'm a working there's all these gurus, and I don't have a problem, I guess, with real estate gurus, but a lot of people find out fairly quickly that they make more money on the education as opposed to the real estate. And so they spend a lot of time having people sit in classrooms trying to figure out, NOI, ROI, and the breakdown of what it looks to hold property. And so a lot of those courses are great. If you're a complete newbie and you're a beginner, that's perfect. And that time is well spent. But I also looked at the internet has a lot of information. So when we did our trips, it was literally 3 days of looking at stuff to buy. So The first day we'd look at stuff that was already rented. Second day we'd look at stuff that required a little bit of rehab. And then the third day we would either go to the auction or we'd catch up with properties that are either bank held or for whatever case, or opportunity. There's a lot of good opportunity zones segments throughout Cleveland. So we look at opportunity zone projects. And for 3 days straight, we'd go from 8 a.m. to like 4 or 5 p.m. just looking at real estate. I'm like, if you're going to come out here, you're going to look at something, and the goal is at the end of it, you should be ready to buy, buy something. And for us, I can't absorb all the stuff that's there in Cleveland. There's no way. But we developed deals with the wholesalers, and I did my best to get people good rates on the properties, and we just introduced them and showed them the reality of what's going on. So it's a fun 3-day event that we created.
Yeah, no, that's killer. I wish I had something like that, back in the day. That's, it's a service to everybody that went out with you. That's, it's really nice.
Yeah. It's funny. You're right. They don't like, a lot of people who are new don't realize how valuable that is when people walk you like through the door of a whole new city. And for me, what I try to explain to people, particularly in Southern California, our drives, across the county can be 4 hours, right? Going from, I don't know if you're familiar, but going from Santa Monica down to Orange County can almost be a 2-hour trek one way, depending on what time of day you're traveling. So I used to tell people, I said, look, it's a 4.5-hour flight max. You get a tailwind, you get under 4 hours, and then you're there. It's not like it used to be. So where I started at 5-mile radius, here I am going across the country, buying real estate based on time.
100-mile radius, actually more
exactly.
than that.
Yeah, 2,000-mile radius. But at that point, the ROI just makes sense.
Absolutely, yeah. And shoot, man, we are nearing the end of the episode. I hate to cut it off because I feel like we're going on a really good path here, but I try to keep it around 20 minutes.
It's your show, man. I'm here to share. It's not. If anything, just parting ideas that with my students, with everybody, or I guess students are participants more than I'm students, but our participants in our program, the way I've always explained to people is, listen, focus on the ROI and don't be afraid of going or traveling or being outside of the state, because in Southern California, it just doesn't make sense to make the large, $50,000, $60,000 commitment, even when you're doing hard money loans, or $120,000 or $200,000 commitment can buy you an entire apartment building somewhere else. A $200,000, I just got in my desk this morning, 8-unit, $375,000, right, in Cleveland. So I mean, it's just you have to be willing to stretch yourself when it comes to real estate investing now, and with Zoom and the way travel is, and things are just a different world. And I was already operating in this way.
Yep. Yeah. You don't, the 5-mile radius is no longer necessary. You guys can go out, you can invest anywhere in the United States. And I've even had guests on here who have breached the borders of the United States and are investing internationally. So, there really
I'm looking at Portugal and Spain right now. So I agree.
Oh, that's awesome. Yeah. I've lived in Spain before and I love Spain. So that's a really cool idea to invest in. Before we cut out, I'm going to have you back on to talk about raising capital, because in my mind, that's how this whole conversation was going to go. But we've been doing so much other stuff that we didn't get to the actual meat of it, which was raising capital. But anyways, I'm going to close it out. We're going to do the quick question round. This is just really quick questions that I ask you. You give quick responses. Starts out with your best book. I love books. So your book recommendation for real estate or business, and then a book recommendation for just general life wisdom.
A book recommendation for general life wisdom is always going to be The Richest Man in Babylon. It's
You're
one
the
of the
second.
best books out there. I've been reading it, and I give it to my kids to read. My oldest son's just graduated college and headed to medical school. So The Richest Man in Babylon is the best book ever on financial and just generalized investing in life. And then the second book I always give people is The E-Myth. Michael Gerber's book on the entrepreneurial myth is always going to be on my shelf. And I guess my third one is The Art of War by Sun Tzu. I can't get enough of it.
I've read The Art of War and E-Myth, both great books. There have been many people who have recommended The Richest Man in Babylon to me, and I've got to pick that up because it sounds like such a good book. Everybody's like, "Oh, it's the best book I've ever read." So
yeah, if you like The Secret, this is the book that is the real meat and potatoes behind the concept of The Secret.
I'm getting it. It's in my Amazon cart right now. All right. Next question. Habits are what underlie our life. They are the foundation of our life. If you could point to one habit that you feel has contributed the most to your life today, what would that habit be?
Writing ideas down. There's only so much you could do typing or the like, but I've got tons of journals of just kind of letting the ideas flow. And so just writing unedited ideas down makes sense.
I like that. I do the same thing. Next question. If you've had a great career, starting way back in 2005 and you've 20 plus years of real estate experience. Wait, is that 20? I don't know. It's many years.
1990s. Yeah, it's 20 plus. So yeah, started out in the late 90s, but yeah.
Yeah, there you go. 20 plus years of real estate experience. So you've been through the ringer. If you could go back to Noble, who was just getting started back in 1999, let's say, just looking at his first house, sit him down and give him one piece of advice moving forward in real estate, what would that piece of advice be?
Be more bold. Just set aside fear, because fear is always the thing that stops us from being as aggressive as we should, even though we know we should be aggressive. I
love that. That is a great piece of advice. Be more bold. Final question. This one's for the listeners. You've given us great wisdom that you've given us about real estate, and I'm sure people want to reach out and say hi. So if someone did want to reach out, what would best way for them to do that? Yeah, LinkedIn is always the best. Just my first and last name on LinkedIn. I've got 20,000 followers on LinkedIn. So just reach out to me, and I practically answer every message, if not definitely answer every message that comes to me personally. So yeah, just ping me. That's impressive. I think I have 11,000, and my inbox in LinkedIn is just completely filled because I can't keep up. I'm just like, You got to take. If you want to reach out, apologize. Motorcycle just went by. But if you want to reach out to Noble, that is Noble DraKoln, DraKoln. I will also put his LinkedIn URL in the show notes. So click down through there, say hi to Noble. Other than that, Noble, thanks again for hopping on. Thanks for having me, Gabe. I appreciate it. Absolutely. For everybody else who's here with us today, thank you guys for showing up. You are the reason we do this. Again, the best way to support the show is just to subscribe, like, and share with your friends and family. Other than that, I hope you guys have a great week, and I look forward to seeing you on the next episode. Thank you for joining us on the Real Estate Investing Club. If you feel we provided value, we would appreciate it if you hit that thumbs up, share it with your friends online, whatever it may be. If you'd like to share or partner with us on an investment deal, we are always looking for quality projects. Go to www.therealestateinvestingclub.com to get in contact with one of our partners. Otherwise, I hope you guys have an absolutely fantastic day, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.